Hey guys, what's up? So I formulated my watch list for the week ahead, and yeah, it's looking pretty nice. So something to just bear in mind, because we do have quite a few big news events happening in this week. My watch list could slightly change. It's only because a lot of volatility comes in and price data changes, so forecasts can change quite dramatically as well. So it's just something to bear in mind. But we do have ISM manufacturing, we have a speech from Fed Powell, we have some more ISM FOMC minutes, and then I think towards the end of the week we have NFP as well. So as we can see, it is a fairly news-filled week for the US related pairs. It's one that I would say that we probably would have to be extra vigilant with our pairs and positioning, and maybe we might even get out the market before some of these news events because of where we might be positioned. So something to just bear in mind. But if we can get positioned prior to news and we move significantly away and we're protected, then it's a different situation. But sometimes with these news events, and I'll just give you an example, if you get positioned, let's say you got positioned for a short here, right, for whatever reason, and your stop placement was there, and then it started trickling, yeah, you could put your stop loss here, but because news came out and it spiked and went all the way up here, you would take slippage. So it's just something to bear in mind when you are trading on prop firm accounts and so forth. You don't want to just be taken out unnecessarily when you are aware that you could have big data news, and these things do happen. I've experienced it before as well, and I've learned from that experience. But some people, time and time again, they just want to get a quick profit, which I understand. Like, we want to make money, but there's a right way to do it, and there's an irresponsible way, and the majority of the time people dwell towards the irresponsible way because it just genuinely feels easier. But nothing in life which you work really hard for does come easy. That's truth. It will come easier over time, but that's when you put the hard work in. You have these mitigations in place to protect your portfolio, especially now that I ask myself the question, like, how would I be trading if I had somebody else's capital? Like, I had an investor's capital who gave me a couple million to trade with. Would I be taking risks like that? Probably not, because okay, on one side you could make, let's say, 500k on a position, okay, but I could make 500k sustainably in a different way without having to take those risks, and I think that's much better way to see things. So building a system, having a solid strategy in place which is dynamic, robust and mechanical and so forth is also extremely good. Jumping straight into it, I did cover this briefly yesterday, but now I've formulated and put it all together. I've got the DXY where I'm looking for the long position over here, where we are coming in for continuation, and essentially I'm just going to see this. If it can come back up, tap into this area, maybe not even completely fill it, it doesn't really have to, it can come over here, drops in, gives me a 1, 2, 3 sections, and if we get a push up insurance entry, then that will be very deliberate, and we'll see that on counter related pairs. That would be something that I would be very interested in seeing across the related pairs for entries. So that's basically how I'm looking at the DXY for next week. It could change because of news, it could just spike and go, might not get the entry, it could even push lower. We just have to wait and see. So the nice thing is, if we do get that commitment and then we get continuation after it, it's very deliberate and it's something you can take advantage of as well. SPX, I'm still looking at long continuation, even though the lower time frame does look like it could be going short. I mean, really and truly, many times over here you could say it looks like it's going short and it goes long and does it time and time again. We could be seeing something very similar over here. Now, we are in a very bullish run at the moment, and yeah, on this, when you zoom into this, it does look like it could be turning around, and yeah, that is possible, but at the same time you have to be looking at it on the weekly as well, and nothing about this really says that we're ready to sell. In fact, actually, this looks like a range right now, where in fact this could technically be more than enough, but really and truly, if this just sells off a little bit, taps into this area and goes, I wouldn't be surprised, and I'll just see that as, okay, that was just a continuation of accumulation of volume, catching people out on the wrong side. And the interesting thing about this is a lot of people would have been getting short here. So how do you get people to short a bullish market? Well, simply doing things like this, and then the psychology behind that kind of just works really well. Now, like I said, it's not to say that this can't short and go a little bit further down. Yeah, it can, but then at the same time, people will be caught on these shorts, and then when it does retrace, it will probably be some heavy retrace to the upside, and a lot of people would have either mismanaged or not been aggressive when they could have been, and I've just seen it time and time again. And it's one of those things where I keep the S&P 500 on watch every week, just to be monitoring the DXY, S&P, and JP225. Even though sometimes there may be nothing going on, it's always worth just observing these pieces of price. And coincidentally, that low lines up with this high, just comes in, retests, and goes. It's just something that I've seen time and time again. JP225, likewise, we are breaking for the highs now, and I think with where the yen pairs are positioned, this could potentially turn around because we are in the mass psychology area. So I would be aware of this little point here to just see if we tap into that and reverse. But more than likely, I'm pretty sure that this could push higher, give you continuation, and just continue and keep going in a trickling momentum. But I would be sharp with the yen pairs this week as well. I wouldn't be putting your full focus into them, but I would be aware that they could turn around. But more than likely, this looks like it's a push up, a correction, and another push up to kind of fill that higher time frame high. So that would be where my main attention would be. But in terms of getting there, we probably will get another larger correction, which could take 2-3 weeks to, or maybe even a week, to just really formulate, a week and a half, and then it goes. But with all this news going on, don't be surprised if we do see some volatility in the markets here, so stay very vigilant for that. USD Swiss, so I've got my top 6 here. I've even got GBP New Zealand, which is down there, which I'll cover at the end. USD Swiss is looking phenomenal. So this is more of a hedge play, because if we are looking for longs on the DXY, then obviously USD Swiss would probably go long as well, and we'd see a larger bullish continuation in this area, and we could take advantage of that. But more than likely, what I'm looking for is sorry, I'll just go back to the daily. Is we can see that, okay, we've got daily rejection over here, we've tapped in, we've retested this area, we've filled this area of liquidity. Is this our typical V shape? So then I'm going to be looking at to see if we can actually sell off from here, get a continuation, and sell further. I think if this is going to shape up and give us this, it won't be so clean on here. It probably won't even come to this low, in my opinion. But I don't want to be caught into a bit of a impulse correction, and then it goes. So more than likely, this will probably give you a clear sign that it's going to do something like this, where it just trickles, and then it doesn't quite come here, or it might come here and then it just goes long. So that's basically what I'm looking at. And then the next one is Euro New Zealand, and with this one I'm just basically looking for it to tap into this area of liquidity, push down, give me an insurance entry, and sell. On the daily time frame, we can see that we do have that near miss to this low. We have come in quite correctively, and we are pulling back quite sharply in a sense, but it is corrective momentum, and I don't think that this is the start of a bullish run. I think that this could actually just be to fill this area, and then we get a sell and we come back in for the shorts, and that's basically what I'm looking for there. Then I've got the hedge play, which is Aussie New Zealand. Now this would be the one that I would take if GBP New Zealand and Euro New Zealand got a bit messy. With Aussie New Zealand, we can see that in terms of a sequence, we are not really coming from anywhere significant, but we did get a push up, correction, push up, and then are we getting another correction, which is going to retest the back end of this to then continue higher. It's possible for us to then fill these areas, so that's what I'll be looking at for the hedge play to go long. There is the potential, because we do have it coming from this area of this correction. It's kind of retested all of that. Could it sell? Yeah, that's possible too, but I would prefer to sell on Euro New Zealand and GBP New Zealand opposed to Aussie New Zealand. So that's kind of why I've got that variation there. I've got Aussie US dollar here as well, where basically I've got this larger correction, which is looking like it could be a bullish continuation. However, what I'm really seeing over here is that we had this expanding, which was fairly large. We corrected, we failed to commit to the downside. Now we're correctively making our way back up to retest this area. Does it continue pushing higher and get to these value areas, or does it kind of push up, catch everyone out on the wrong side, impulse back down, maybe on Friday with NFP or whatever, or one of the news events, comes in, gives us a clear continuation pattern, and we can go in short. Perhaps the first one won't be the easiest one to decipher, but then if there will be second and third and fourth if we do continue to the downside. And that's basically what I'm looking for, is a clear sequence coming from this. But from a higher time frame perspective, it does look fairly massive and corrective. So I wouldn't really want to just kind of jump into something straight away. I would really want to wait for deliberate confirmation from the markets in these scenarios, because you can really get caught out in a squeeze. Because right now what we're seeing is a push up, larger correction. Are we going to get another push up, larger correction to continue? Those are variables as well. So if we do get continuation over here for the upside, I wouldn't really hesitate on that. I would cross-reference it personally with the DXY, see how DXY is performing, and then if it's the one, it's the one, but then also just double check your other US related pairs as well, in case there's something else which is shaping up which might look a bit better. With Euro USD, so this one's a little bit of a tricky one, because I'm basically forecasting this being a channel, and these are very tricky things to do, because what can happen sometimes is you forecast this, you get married to it, and then what happens is it develops and turns into this, for example, and you can't really catch the angle properly, and then it turns out it's not actually even an angle, it's actually just pushing to the downside. So it's one of those ones where I would just say be very careful when you are putting on patterns like this. But for what I'm looking for is kind of lining up with the DXY, because with the DXY we're seeing this as continuation to go higher. So if that's the case, then this could potentially sell off. So I'm not fully set with this particular setup just yet, and especially with all that news, it's unlikely that we would get something like this, but it's possible at the same time. So what I'm going to be looking for is essentially this, where we have this as the reference point, and then we're coming in with a 3-touch here, and we're squeezing into it, and then we come in here, we push up. Now a continuation over here would be much more low risk and better for positioning, but if we did get something in here which was deliberate and clear, and I could decipher that and get an entry in there, then I would probably try take the risk, lower risk of course, because of the news around it, FOMC and so forth. Probably wouldn't get the entry on funded capital, but something to just bear in mind with what I will be looking at. So that kind of covers it for these, and I'll just actually jump into GN because I covered it previously. Essentially, if I go back to the daily, we can see that we are essentially potentially in a channel, but the second bottom hasn't been confirmed, so similar to what I said on Euro USD. However, we are trading in this corrective channel right now here, where it's a massive area of accumulation, where we don't necessarily have to come to these areas here, but we can see from the daily that what we've done over here is we've actually tapped into this area of liquidity, rejected, and left a pretty decent bearish candle. We go over to the 4-hour, and we do have 4-hour commitment as well. I just want to see a clear continuation pattern now, maybe something similar to the size of this, giving us maybe a potential left shoulder, right shoulder sell. But yeah, essentially I'm just going to be looking at something with continuation. I'm not looking for a subjective first touch as well, being very particular with the pattern. I'm looking for a 1, 2, 3, and then look for the sell entry in these areas, potentially even a insurance entry within there, and then look it to play short into those areas to the low. Obviously being more aggressive as we approach these lows, because probably next continuation pattern will be around about this area, or potentially it just may not be ready to sell and continues coming back up. So just to kind of demonstrate that there, that's looking really good. That could shape up on Monday. And then going into the additional pairs, I've basically got some really good additional pairs, I'll be honest with you. These could have easily been put into the top 6, but I just wanted to separate them to make them look quite organized, and then also group them. So GBP CAD, as we've seen over the weeks that we've completed with this nice little structure here, we've tapped into these areas of liquidity as well, so we are in a clear run to the downside. In terms of sequence, it's looking quite clean as well, which is nice. Now we do technically have this 2-touch, but there is a mini little near miss in there as well, and if we can tap in, create 2 clear bottoms, and we push back up and tap into these areas, it is risk entry territory. But because of what price can do as well is if it does spike up and continue, comes in, retest that area and sells, I don't want to be caught in that sell. So I'm going to be waiting for something a little bit more deliberate. I'm not really convinced that it's going to come all the way up here, but if we can come in with a little bit of structure into that, then I'll be looking for a risk entry. If it's a bit corrective or impulsive, I'll just refine and wait for the insurance entry, or maybe set a pending order. I just have to really evaluate the price when it gets there, but that's really the structure, and it's pretty clean. EuroCAD, likewise, I'm looking for continuation to the downside in line with the GBP CAD, where we have this, and now we left a little reference point there, and are we going to come in with structure? That's risk entry territory for me. So if GBP CAD and Euro CAD both shaped up for the entry and this was clean, I may just use this to then take advantage of the sister pair, but they both look pretty good for the risk entry, so I wouldn't really be put off by taking that. I would say that that is a really good structure in many senses, especially with this, how this middle section looks like it's developing. We could get in for a pretty decent position. So GBP CAD, Euro CAD, they could easily be in your top 6. I wouldn't blame you at all. Euro Aussie as well looks phenomenal. So if you look at it from a daily perspective, you can see that we are in decline, correctively pushing away, but there is sequence within there. There was a very beautiful entry in here as well. If anyone caught it, that's amazing. And then you can see here that we're now trading below, but technically through this low here, but we're trading into that low, which is nice. If I go into the 4 hour, we can then see that, okay, cool, we've left a little reference point, we've pushed below, we're correctively coming back up. Can we fill this? Kind of giving you that sort of V shape internal, but also I am looking for a bit of structure in there, and then I just like to see how that formulates. And then if we can create them 2 bottoms and then get back up to these areas, push down, give me a small insurance entry, I'll be able to go short. Risk entry territory possibly, but I'll be looking more so for that insurance entry, and then this could develop into something larger as well, so you'd be conscious about that to then potentially see this develop into this eventually, so you can go short and then it becomes a 1 2 3. So just be aware, if you do take the 2 touch, it could develop into a 3. Aussie yen, so the yen pairs are in a very interesting area at the moment, so for that reason I am just going to keep them on watch. Now, it's not my main focus, even though they are in the high value area. It's more than likely that it could just continue pushing higher before we do come short, so I've only kept it on there just in case it does shape up. Then what I will most probably do is do a scan through all of the yen pairs and just kind of make sure that I've definitely got the best ones on board that I want to take advantage of. But from the way I'm seeing this kind of play, I do want to see something more deliberate, because even if I did get something like this, it is higher risk. So I do want to see a clear push up. Even with this news around, there is a fair amount of news coming out this week as well. So even if you left this one off and you waited for the week after, you'd get more of a clear confirmation that we're over here somewhere, and you might be able to get short entries with better positioning. But overall, if we get a clear push up, push back in, continuation, I won't hesitate on a short position on that, because it would still be high probability, well positioned, high up in the run as well. And even if this developed into something larger, you'd have a pretty good risk reward into it. And then exact same thing with CAD yen. I'm just waiting for price to just continue pushing higher above this ray line, and then when we do push back below it, continuations below it is what I'm really in favorable for. Anything above, I would consider it as too high risk, so I'm just going to leave that one out. Going into the extras, I've basically got UK 100, Aussie 200, US 30 and WTI. So with UK 100, we can see on the high time frame as well, if I go to the weekly, we did actually create this beautiful 1 2 3, and now we actually are responding really well to it. What I'm looking for on the daily is to see if we are playing within a range, and we are. So that's one nice thing, is we can actually see that, okay, from an A to B, we could actually play this range. This could get complex and then maybe sell later, but more than likely positioning from here early in the run is still really nice. If I go to the 4 hour, we can see that there is a level of sequence, but it's not the cleanest. It's actually quite corrective and choppy, giving me the indication that this may still come back up before it goes short, because overall this is all just very corrective price action. However, it is a state of accumulation high up in the run, so if we are going to continue to the downside, we are accumulating a lot of volume in this area. We're finding on the 1 hour, I'm basically looking at this as the subjective first touch, second touch, and then third touch, and then basically looking for the short from this area. So if we can get something clean, which is very deliberate, then I'll be looking for the continuation. But even so, if it does start to sell off without me, then I will wait for continuation below here, because there's no point really trading in the range around about here. Just wait for something to break, and then you'll get clear deliberate price action and continue with the move. Also, something to just bear in mind, it's very easy to get caught up in certain price action and feel like you've missed the trade. More times than not, if you do end up catching yourself feeling like that, it's probably better to avoid taking your next trade. because you're coming from a sense of FOMO, where that can kind of affect your decision making. So you want to be extra careful with when you're taking positions as well, that you're coming from a clear, collected mindset, and you know where you're well positioned. Like when you're forecasting on the weekend, you're doing it with a lot more patience, a lot more taking your time with it, where when the market's technically moving and ticks are going up and down, you kind of feel a little bit rushed sometimes as well, and you need to learn to basically control that. And I think where a lot of people go wrong, including myself previously, is I would just want to get involved, right? I'd see this kind of come here and I'd be like, yeah, okay, I'm in, that's the one. And then what happens is it comes in, tags me out, and because I was so excited about being in there and it came back up and I was a bit upset, I didn't really see that come back into this area and look for a re-entry, and then I completely missed it. And then what you could end up doing is just zoom out and then actually see it for what it is, and you're like, okay, hang on a second, actually there was actually entries in there and so forth. I just got too emotional. So that kind of covers US 100. Aussie 200 is a very aggressive one, I'll be honest with you. So if I go to the weekly, what we can see is it's not clean at all, right? This looks very choppy, very wicky. It's not your typical area to be trading, but when you go into the daily and you get a little bit closer, you can actually see in terms of pattern separation that we are responding to a messier version of structure, but there's something happening in here, and it looks like we're making a bull run to the upside, but just in this very messy way. So when you go to the 4 hour, what you can see over here is that price actually came in here, tapped into this area of liquidity, and then it pushed up aggressively. Now it's in its pullback phase because it's responded to this area of where it kind of sold off dramatically, but it's coming off corrective when you look at it on the 1 hour. And even though it's kind of like soldiering its way back down, we had this little hook point here where if I just invert it for a second, you can see it here where you've tapped into this area of liquidity, you left this little footprint there, you've pushed up, you've tapped into it, creating a V shape. What if you get insurance entries on the way down? And understanding how to trade Aussie 200 in its impulsive phases is really beneficial as well. So it's something that I definitely urge people to spend some time and just study how to trade the momentum runs, because you can make a decent amount of profit. So there will be a lot of candles probably just moving, and you just kind of have to wait for those structures to formulate. When the structures do formulate, you can take advantage of them, and then basically, yeah, they move. So I'll be waiting for that to push up, maybe give it a continuation. Even the continuation could be here, not really bothered. But the nice thing is of how we've moved away from this is really nice. And if we continue continuation, I can get positioned in there and then trade that up into the next point, see how that goes. And potentially, I like to call it folding risk. So I could move that to break even, lock in 1%, take another trade, then use that risk to then get into another one. And then if that ends up going, then I've got 2 positions going on, lock that in and so forth. And you can fold the risk, but you have to be careful with some pairs because of the volatility in the news. If you end up doing that on the wrong pair, you could essentially just lose more than your 1% risk. So you have to be careful with how you do it and what time frame you're using. But I think if you're sticking with the 15-minute, you should be okay. But usually you want to make sure you've got profit locked in before you start scaling into another position a majority of the time, because then you over risk. That basically is what I'm looking for. And then if this ends up being the one, you can see how well positioned you are early on in the run for this to potentially make its move all the way up here. Obviously there'll be larger corrections and whatnot on the way up, but if it is impulsive, then you've really positioned yourself really well for that bull run. US 30, this one's also a very strategic one that I've got on board. So as we saw with the SPX S&P 500, we could see that there's the potential for it to continue long. Now with this indecision for this to go short, I'm pretty sure that we've been gearing up to go long and just catching people out on the wrong side. So what we can see here is that we kind of had this this formulating like this at first, and then catching people out to see, oh, is this the short? And then in here we would then go something like that, and then look at it like this and be like, oh yeah, okay, cool, that's ready to go. Now if that was really the one, it would have gone, it would have truly been on its way down. But as it's failed to go and it's rejected, I don't really believe that this is ready to go, which gives me more of a reason to think that the S&P 500 is still in its bullish continuation. So it's nice to see that some of the related pairs sometimes give you clues for the pair that you're using to relate them with. And then essentially when you kind of just, size it all up and put this in here, take this and put it there, you can then see that, okay, hang on a second, this does look like it could be a little bit more of a corrective channel to come into these areas to then go long. Or if I then take it a step further and just take the most two relevant touches here and look at it like this, that angle looks a little bit better in my opinion, especially for a pair like this, where, okay, cool, so we actually have our middle section, and are we ready to go to the upside? And then we kind of just make our way, we go, especially with impulsive price action, we don't need to correctively keep squeezing. What we could see is, price actually makes its way like that over this course of the news, and then all of a sudden we're back in high value area territory, right? So obviously I'm not saying that this is the trade that's just going to take it all the way there, but it's definitely one that I think could be well positioned if we get deliberate clear price action to go there. So that's basically what I'm looking for on the US 30 and the thought process behind it. And then I'm looking at WTI, which I think is also a really phenomenal position for longs. One thing that I really do like about this one is when you look at it from a higher time frame perspective, this pattern isn't really fully confirmed yet, so I wouldn't really put all my eggs in one basket. But if we just look at the current sequence, because we haven't really come from anywhere significant, but we don't always need to, we can see that we had a clear push, continuation, large continuation. If we can come back in and hit that area of liquidity, and even if it does drop out a little bit more over here, it doesn't really matter. I'm looking for the insurance entry on that. I will basically then look for continuation to go long. So I will most probably be looking for either a strategic risk entry in these areas or the insurance entry if presented, but more than likely if the insurance entry is presented, it could be further up in the run like here. It doesn't really matter, to be honest, if you get it here or you get it here. Reason being is as long as you've got enough to manage into that high and then it continues going further, you'd be pretty good to go for these areas. And it's a phenomenal position actually in terms of sequence, so that's what I'm looking at. And then that kind of just summarizes what I've got on watch this week. So that's basically everything for this SMB. If you guys have any questions, you can drop them in the comments below, but besides that, have a great week and I'll catch you guys in the next one.